The Hedgeless Horseman here. It's May the 7th, 2024. I recently came back from the Deutsche Goldmesse. First of all, thanks to the sponsors. Came back from the Deutsche Goldmesse. I was really impressed with this conference. This is the first time I'm here, or the first time I was there. And I mean, from a networking perspective, I think it was really, really good. You get a chance to almost talk to everyone at the conference because it's more of a boutique conference. There's not, an extreme amount of companies or investors. And it's like PDAC, for example, that's a zoo. I mean, there's people everywhere. It's kind of chaos. If you go to a booth, I was gonna say you gotta be lucky that the person or the company you hope to talk to, that they're not already busy or they're doing something else. It's just hard to even find people. And again, everyone is kind of busy. And there's several rooms. Just to find a booth can be a bit tricky, yada. So I probably talked to more different people at Deutsche Goldmesse than I did at PDAC, even though PDAC had like 40,000 visitors or something. I would say this is, I really like this one. And I was staying at the hotel where the conference is. That makes it a lot easier from a convenience standpoint. So this is a picture from me at the panel here. Pete Panda and Trevor Hall. We were talking about critical minerals. And I'm certainly not a macro expert or a supply-demand expert. But I hope I had some good pointers, let's say. I mean, basically the gist of it was that I think copper is the best risk-reward bet, in the sense that regardless of what happens with AI, digitalization, EVs, we're still gonna need more copper. So that's what I like. Whereas like lithium, yes, it's crashed already so much, and the lithium juniors have crashed. Any commodity really gets interesting when the sector has crashed 80-90%, because there's going to be a bull market one day. Unless lithium goes away, there's going to be a bull market in lithium and lithium stocks. I don't know when that is, but at some point in time. But copper juniors are quite cheap as well. And I feel much more comfortable with copper overall than lithium, because lithium is mostly tied to the EV theme. So that's like one theme it kind of relies on, and that there's no substitution, yada yada. You can't substitute copper in everything it's used for, and the uses are increasing given that we're going towards digitalization and more computing power, and that needs a lot more electricity, yada yada yada. Me and Erik Strand, another Swede, the only other Swede I saw. He's with AUCU funds. He was also presenting. Always fun to speak a bit Swedish. It's also quite fun that literally both are named Eric. This is me with Jeff Clark. I think I've seen Jeff Clark around at some other conference, but this is the first time actually meeting him in person. So that was fun. Again, it's like it's a great way to, especially since it was kind of mining Twitter heavy, in a sense that a lot of people that hang around on Twitter talking mining, and that makes it just you have some familiarity with some people, and then it's just fun to kind of finally meet them in person. I also had quite a few people come up to me recognizing me, who let's say follow my work on Twitter or YouTube, whatever. So that was also fun, especially given that they came up to basically give their appreciation. That's like they like what I do. That's always really fun to hear. And yeah, I mean, there were some kind of fun things like during the panel. Even though it was more critical mineral themed, I got asked one question from the audience was, "What are 3 top picks are?" And I wasn't prepared for that question, and I'm quite uncomfortable, since I can't really. I mean, when I do videos or write them up, I can kind of explain it better. I don't like when people maybe just, I'm going to buy this simply because, he likes it without knowing what they buy into, for example. But I gave him Magna Mining, First Nordic Metals, and Inflection Resources. Those were the first ones that sprung to mind, at least, and explained some of the risks and all that. It was fun. It's like later on, I spoke to another guy who's very much in the industry. He, you would probably know him if I told you who. He's well versed in. I mean, he keeps track on majors, mid tiers, and what have you. And I just asked him, it's like, okay, so what stocks are you liking from this conference that might be new or that you don't own? And he's like, starts off with Inflection Resources. It's like, okay, nice. I mean, yeah, one of my 3 pitches, and then he goes on to say First Nordic. So I'm like, okay, good, because him and me have quite a different approach to things. I mean, a lot of people, I would say, a lot of investors, like every single investor approaches it in a different way. And there's investors that I think are really good, and they might not almost share any holding of mine, and we can both make money. Everybody has a different, again, strategy, what type of staged companies, or what stage of companies they like, what commodity they like. That's what I actually like and would want to press on. That is like, I have my strategy and I have my certain way of looking at things and companies and time frames and risk profile, what have you. That doesn't mean that's the only one that works. Everybody should create their own, in a sense, or yeah, that's probably the best way to put it. I think that's a good idea, because I want to have fun as well. That's why like I said during the mining stock education interview, I did not, or I said that, like, yeah, maybe pure prospect generators, royalty companies and streamers, they might be the best from a risk reward perspective. They might actually be the best investments overall, especially when you account for the risk. But I just find it too boring. But that's okay. It's like, you can make money on playing it really safe and having a even more like risk aversion approach. But I like to speculate on some drill plays and take a bit higher risk, because the way I go about it, as yes, I might have fewer successes, or have take on more risk than just having a bunch of streaming companies, but the ones that work, they pay for a lot more. Typically they have more upside than maybe streaming and royalty companies, so that just simply offsets the additional risk I'm taking. That's the idea, at least. But no, it was fun to, like, okay, someone else, and he didn't watch my panel, so he didn't know that those 3 were my 3 pitches. And then the first 2 names he said he actually thought were really interesting, that he was going to look into more, was Inflection and First Nordic. Magna, of course, wasn't there, so out of the 2 companies that were there, that I pitched, 2 of those were the first 2 that came to his mind. That's like, okay, this actually sounds really interesting. Anyway, so gold, I mean, it's doing quite well. This, I guess, could be seen as a bull flag. Like always, I don't trade based on this. I have no idea where we're going. I mean, just 3 days ago, or at this point in time, maybe that's like 5 trade 5 trading days ago or whatever, a lot of talk on Twitter was that we were going to have $2,100 as the next stop, and I don't know. Simply, I don't know. I mean, just today or yesterday, since metals were up a lot, I think silver was up like 3.7%, gold was up at least 1%, and all of a sudden you hear, calls for, oh, we're actually gonna go to whatever 2,700, 2,500. That's kind of my point, which I keep harping on. It's like, in a move like this, here we're gonna hear about this short-term bear market. Here we're gonna hear about the short-term upside potential. Here we're gonna hear about the short-term downside potential. So it's like just within a move like this, there's like, or especially a move like this, there's many bull and bear markets declared on Twitter and in the forums and what have you. That's why I don't care. I focus on companies, because like nobody really has any idea where gold is gonna go in the short to medium term. Everyone is kind of guessing. And my simple strategy is that, okay, I know the juniors are near the lows. I know how much they will go up from the lows to a high, and that's where I'm at. That's why I'm in. Yeah, sure, we can go down to whatever. Gold could go like this and then go like this, but we don't know. Maybe gold goes like this instead. So I don't know that. But if I can pick companies that I think might be trading down here and are worth somewhere around here, and have a growth profile like this, it's like I'm already winning. Can they go down first? Absolutely. Can they go like that and later on go up there? Yes. But that's not really a problem. If you pick good companies that actually can create value, etc., you're gonna do fine anyway. You don't need to get every short-term moving gold correctly, and especially since, as we've seen, juniors went down when gold went up, so they don't really necessarily follow. It's all sentiment driven. We don't know when sentiment is going to change. Sometimes it feels like it could change at any point in time. Like, I mean, here for example, this is the fine silver, which of course kind of looks like a trading sardine. And I've shown this before. Okay, if we again, I'm not using this as some kind of investment strategy tool or anything. This is just an observation. Okay, had a bottom. 4 years later we had a bottom. 4 years later we were down at extremes again. Now they got the Tepal project back, which they lost I think in 2002 or something. So the company's changed. I mean, it changed for the worst, and then they got it back. But they still went down to, pretty, almost absurdly low levels. And my point showing this, like, maybe we were up at, first stop. Maybe this is the first consolidation, because in all of these bull legs, you can see, I mean, there's a number of corrections and consolidations. I bet a bear market could be declared here, you know what I mean. But if you zoom out, then it's like, yeah, okay, if you didn't care too much, yeah, you had 2 weeks of down action, but then it got going again. Then 2 weeks of down action, and then got going again. It's so easy to get shaken out. That's what I guess I'm saying. And especially now, a lot of people, since we had so many false rallies, that's what everyone assumes, kinda. So I just find it interesting. It's like, yeah, okay, they actually closed over these two here. I don't know what that means necessarily, but it did a close at a higher high. So it took out, if we might be around here, let's say that yes, the second leg might be starting. I'm not saying that's the case. I'm just saying, I mean, is there a possibility? Yes. And this is not representative for the entire sector, but this is one that's for sure is very sentiment driven, as you can see by the 80-90% drop downs and then 1000% runs. The only thing I know really is that we're down here, and I know the juniors overall are gonna whatever. It's like get to this point at someday. If that takes 1 year, that doesn't matter. If it goes down first before going up, doesn't matter either, because we're talking hundreds of percent, which is going to be worth the wait, even if it takes 3 years. And we might be here, so it might not be 3 years. It might be a good year ahead. That's the thing. This is I just looked at copper again. Don't use it as a trading. I don't trade copper like, I buy copper futures or I buy copper majors. I just still think it's interesting. Yes, there seems to be a lot of good fundamentals for copper, and everybody's been waiting for the recession and all that. Copper prices obviously have held up well. I mean, they're close to all-time highs. And just looking at this, true strength indicator, we've had that crossover since 2000. Yeah, since the year 2000. Then it's happened 1, 2, 3, 4, and now a fifth time. And if you just look, okay, what happened afterwards? This is bottom of the 2000 rally. I mean, this is where basically, and this was the bottom for gold and silver and all that. But this is, I think, 450% move. This might be, 50% move. This was 50% move, etc. So just going by what we've seen with this indicator since early 2000s, there's at least been a 50% rally within 12 months or something. Well, here it actually, I guess it. When is this? This actually was flat for a year and then started ripping for really good. But let's say the medium term, like on a 1 to 2 year horizon at least, every time this has happened, it's been followed by higher prices. So is that going to happen? I don't know. Does it mean it's going to go up immediately? No. I mean, like here it didn't really. Here it consolidated for 3 months. Here it consolidated for maybe 2 months, and then consolidation and whatever. So that's kind of my point with the juniors as well. It's like even in a massive bull market or in a bull leg, typically most of the time the price is consolidating or trading sideways or even down a bit. I mean, this is actually a pretty good ripper here, but again, this is 2 whole months where the price didn't go anywhere, went up. Price didn't go anywhere really for 2 months, up. A month of down action. So that's the thing. My point is that's like the only edge I see is that if you're kind of long-term focused. I guess that's it, yeah. So this was an interesting article. It was actually, I watched an interview by Chen Lin, and he alerted people to this, where it's like, this is Elon Musk on AI. I've never seen any technology advance faster than this. The chip shortage may be behind us, but the AI and the EVs are expanding at such a rapacious rate that the world will face supply crunches in electricity and transformers next year, says Elon Musk. AI will run out of electricity and transformers in 2025, and we talked about that on my panels. I think it required 2,300 tons of copper or something when Microsoft invested 500 million in data centers, 500 million. And if you read some of I'm not saying that they're going to do it, but you can read like Amazon is saying they're going to invest 150 billion over the next 15 years on like data centers or AI. Google says like 100 billion. And then you have, I think it was maybe Facebook or something saying like 100 billion. So if 500 million worth of data centers requires 2,300 tons of copper, imagine, if you have 600 times that amount or something. I just want to point out, this is pretty much almost here right now. And I've seen, I think it was Mark Zuckerberg or someone, according to Chen Lin, who said that, you know, if they put some of these new high-powered chips on in, you know, a decent quantity, it would fry the electricity grid in the US. That's quite interesting. So you can imagine how much infrastructure, not just, you know, to build the data centers, but the infrastructure itself. And copper is, I think, the most used metals in building data centers. So it's just one of those bonus themes kind. I mean, if EVs alone are set to take care of, you know, making the supply shortage for copper and what have you, a big deal in the coming years. AI might be adding to that. Do I know that's going to happen? No, I mean, AI might be a fluke, kinda. We might be hitting the capacity already, and there's not going to be much more build out because of whatever reasons, or it's really here to stay, and there's going to be a rush basically to build out the, you know, the power grid and the data centers, so so the US especially doesn't get you know, behind China when it comes to AI. If it's kind of a cybernetic arms race in a sense, then I think there's going to be a lot of, let's say, political push and all of that behind it. And I mean, we see, well, it's mostly to other critical minerals perhaps so far, but it's like Pentagon, you know, throwing money at nickel juniors. Okay, let's look at some news. AngloGold Ashanti, Inflection released this, what was it, May 2, basically at the start of the Deutsche Goldmesse. So, you know, Alistair had something fresh to talk about. And that's the funny thing about this sector right now. I'm telling you, it's like we can see what the majors and smart money, the billionaires, what they're doing. They're kind of buying hand over fist. I mean, M&A is really going off. We see, you know, Rick Rule, McEwen, Pierre Lassonde, all of those guys who are actually billionaires and who made money investing in miners. They're buying into a bunch of juniors. They're kind of pounding the table. That this is, you know, especially like Rick Rule, who said, oh, he's kind of been out of the, I guess, gold, silver junior sector for 12 years, according to him. But now he's kind of pounding the table. So, I mean, if you have one of the absolutely smartest guys and one of the richest guys in the space pounding the table, putting money into juniors, it's like, you don't get a better signal than that. And then people, as always, are complaining that, oh, the juniors are not moving up yet. The juniors are, I mean, that's the whole opportunity. Rick Rule is not complaining about the fact that juniors are down. That's the thing he loves, that they are down, because he knows they're going to go up a lot one day. So anyway, going back to this news release. So AngloGold has elected to designate Inflection's Duck Creek exploration license as a phase 2 project as defined in the exploration agreement. So this is kind of, I mean, I was going to say this is an early exercise kind of, but that allows them now to test the Duck Creek targets with, you know, A&T. I thought they had the A&T service, but you know that geophysical kind of experimental survey they did at Duck Creek, which showed, I think, 6 or 8 targets. So they're going to be testing them. The Duck Creek Phase 2 exploration program will initially comprise approximately 8 deep holes, testing a variety of step-out and geophysical targets announced on April 8. The geophysical targets are mostly located in the vicinity of early drilling, which returned alteration, monzonite intrusions, and geochemistry typical to that seen near alkalic porphyry-related copper-gold mineralization. The company anticipates starting this drilling in June, which Inflection will operate for a 10% management fee. So I mean, that's great. Okay, so they're gonna put in 8 deep holes, testing a bunch of targets. They already know they're getting typical Macquarie arc alteration and geochemistry. That's typical, to that senior alcoholic porphyrated copper gold mineralization. And they've already hit bornite in drill core at Duck Creek. So like, there should be at least one porphyry somewhere around there. And they have several targets, and that's just for Duck Creek. And now, I'm not gonna say finally, because like even if even though people might bitch that it's taking a long time, this is an absolutely enormous land package. But now they will do deep drill holes. I think these would be the first like 800 meter drill holes, strictly in to geophysical targets, where in an area where they already know or have hit porphyry alteration. Do we know that they're gonna make a discovery? No, but this is like, now it's on really. For Duck Creek it's on. If they make a discovery hole in any of those deep holes, everything will change. And then there's still, a bunch of targets left, because phase 1 is still ongoing, delineating more targets. And if they have success with this ANT targeting, maybe that's, I'm not going to say a silver bullet, but maybe it's a really good method. Maybe it works really well here. In that case, the chance of success and time to success is going up, and time to success would get shorter. Because then they would, probably apply that to other areas where they have, confirmed geochemistry that typically belongs to a, porphyry system. So then everything, there's a lot of implications, let's put it like that. And now it's getting real, because now they will actually target, not as blind as before. Now they have like distinct targets they will be testing, and they have several of them. Also, they've added extra ground that AngloGold, which will get into the AngloGold phase 1 deal. So AngloGold will fund exploration at these new targets too. And I gotta say, it's like my first impression was kind of like, okay, have they already run out of promising targets from the phase 1 campaign? And they have to kind of stake more, but that's apparently not it at all. And I told this interpretation to Alistair. He's like, or I said that was my gut feeling. I don't know if that's because the sentiment environment we're in or whatever. There's like, you're kind of paranoid that you have a negative skew. But it's actually, no, since this is all undercover. Where they staked, they were like educated guesses where they think the prospective rocks that host the, Cadia deposit and Koval deposit and North Parks deposits to the south, where it's outcropping, where they can see where this belt continues. This was all undercover, so they had to take educated guesses. Now that they're confirmed, they're obviously drilling all over the place and can see, it's like, yep, we're in the rocks we're looking for, they are here. With that information, they have a better idea. Let's say they drill a few holes here. It's like, yeah, we're in the Macquarie arc. We're in the, well, I guess that might be by definition, but it's like, yep, these are exactly the kind of rocks that we want to see. This is the continuation of the belt. If they can confirm that, and they have geophysical signatures, then they can confirm, it's like, yep, it's trending that way. Whereas let's say they had staked this, they drilled, and it's like, no, this is a totally different rock package, it's the wrong age or whatever. So then they would know, oh, we're actually in the wrong environment. It's not actually going here. So the geophysical signature was showing something else. We were wrong. So actually, given that they have more information from drilling, they have a better understanding where the belt continues in other places undercover. So from a pure balance of probabilities, the prospectiveness of these additionally staked targets or projects should have, you know, higher chance of success than any of the ones they just staked before they even knew if for sure that's where the belt was running undercover. So this is kinda, it's like, first of all, early exercise on Duck Creek. They want to do deep holes, find out if the A&T survey is a good tool, if it's kind of a silver bullet in a sense. Then I mean, I would guess then they're gonna do that at other targets as well. So that's gonna be a massive thing, not just a potential discovery itself, but imagine if A&T actually works well in a lot of these places and they confirm it at Duck Creek. I mean, then I was gonna say, then we're perhaps really talking. Then that can be used at any other area where they're hitting favorable, you know, geophysical or geochemical signatures where they kind of conform porphyries. Boom, okay, we do an ant survey there as well. Yep, 5 targets there. Maybe, you know, one of those are also porphyry bodies or more than that. So this is, and I've talked about Inflection for a long time. I mean, it's for an early pre-discovery exploration story. This is probably, this is my favorite basically, because they're only going after large projects, copper gold, tier 1 copper gold projects, and they have staked as much land as a lot of people are sharing down below. And it's like this strike alone is on par. It should be fitting, just again based on a balance of probability, this strike length alone, assuming most of this is the same belt of rocks as host the Koval, North Parks, Cadia, balance of probabilities would suggest that there's 2 to 3 significant porphyry clusters here. Yeah, and of course, I mean, what's the market cap? 19 million, and it's like someone pointed out here. Odd how the price stays the same after material highly positive news. Again, this is the beauty of the junior mining space. If you look at the price, you couldn't have guessed what has happened. Nobody can really see that. So okay, according to, the price didn't really change at all. So what does that mean? Literally, the funny thing is, like, we're talking again, they are after the biggest of the biggest in a sense. They're only drilling for like massive gold deposits in equivalence, if you know what I mean. And it's like every target is 2 to 5 million ounce gold target. Let's put it like that. They're gonna start drilling. If they hit something, it's in Australia. If they hit something material like Greatland Gold, which have I think 25 or 30% of the Vior project, they went up to it took a few years. It's not like just from the discovery hole, but they went up to, as a minority minority owner in a buried block cave target in, I think it's Pilbara. They peaked at around 1.3 billion in market cap with their 30%. Inflection is at 19. Cadia is worth, I don't know, $10 billion. And I remember a report by, I think it was Credit Suisse or UBS a few years back, which had put a $10 billion NAV on Cadia, the Cadia complex. Are we necessarily going to find a Cadia? No. Cadia is remarkable. Cadia is tier 1. Is there a chance? Yes. Is there a chance that they could find something like Koval and North Park? Yes. And those are also like $1 billion projects. Which, if they hit it, AngloGold would fund it up to a PFS study, which would cost probably 200 million. and Inflection would get 1 to 2% royalties, which as a rule of thumb, 1% royalty is like 5% project interest. So they would keep at PFS level, they would keep 25% ownership of the project plus up to a 2% NSR, which is like 10% more. So that's 35% of maybe $1 billion project, which got funded up to that point, which would cost, if Inflection were to do it, hundreds of millions of dollars perhaps to get it to a PFS stage, since it's underground. And it's priced at 19 million with no like dilution risk that I can see. To me, this is absolutely baffling. I mean, what's the chance of success priced in that they're going to make a discovery at Duck Creek alone? I mean, if they would hit something worth 1 billion, if they get to keep like 35% of that, that's 350 million. So it's less than a 10% chance priced in that they're going to find something worth 1 billion, let alone what, I have here on where even the minority stakeholder get up to a valuation of 1.3 billion. Or, whatever, Acadia or North Parks that are worth more than $1 billion, again, up to like $10 billion. So there's like the market, again, in my opinion, the junior sector is excellent at pricing in the short-term consensus, but it's absolutely dog shit when it comes to appraising risk-reward. To me, this is absolutely remarkable. Because in the chance of success, going from a market cap of this, the reward potential is so enormous, especially when you have, it's not only that we have one target, one shot. They could make 1, 2, or 3 significant discoveries. And they would get up to 35% carried interest up to a PFS, which costs hundreds of millions of dollars. So at face value, this Mr. Market right now is pricing in that there's no chance that Inflection is going to hit anything within the next 3 years. Or 4 years, or whatever. I think that's absolutely comical. And again, who knows? I mean, AngloGold wouldn't do an early exercise on the phase 2 if they thought there was no chance in hell that those Duck Creek targets, where they actually have hit bornite already and have porphyry signatures, that they have no chance of being anything worthwhile. So it just goes to show, it's like either AngloGold are completely brain dead, or in my opinion, Mr. Market is completely brain dead. So the question is, should one bitch about that or whatever? I wish I had more money right now. It's not only Inflection I want to buy more of, but it's like I've never seen a sector like this. But this is a unique case because I've never seen a junior have a land package like this, where they have a major that's gonna basically be testing every single target. It's like 23 juniors in one, and there's a major funding every project. It's a remarkable story because I've never seen a thing like this. And again, note that like every single target is they're only looking for large targets. That's the filter. In the geophysics, they need to see size potential. They're not going after any target. They've already screened out the ones that they think are too small, whatever. And that's done by, the most impressive technical team I've ever seen. So these guys are only chasing, pretty much only chasing $1 billion+ targets. And they're about to drill several of them in June. And this is the market cap. There's no guarantee of success, but this story, this is literally one. It's like, what's the blue sky case? Is it totally out of the question that they make, at the end of the day, they make 1 to 3 discoveries? Let's say we go into copper really does well, there's a jurisdictional premium, whatever. And we know that the complexes in this area can go up to a $1 billion in value. No, 10 billion, I mean Cadia. But billion to 10 billion for a porphyry complex. Again, I might be wrong, but this is absolutely, from a risk-reward perspective. Let's put it like this: if I only did high risk, high reward exploration juniors, and I knew 100 Inflection Resources, I would put 1% in 100 different Inflection Resources, because any one of them or one success could pay for maybe, again, the impossible to say, but 1 to 50 failures. So maybe I would need for 4 out of 100 to work out, and I would make money. That's the kind of asymmetrical risk reward that I see, at least. Then we have Homerun Resources, which is a new sponsor of mine, one of my most recent, let's say, new shareholdings. I'm not going to pretend that I'm a silica sand expert, but I believe that Homerun Resources is also a highly asymmetrical bet. Enough so that, I mean, the case is convincing enough that I don't feel like I need to be an expert on silica sands. This is simply a case where, and these are the kind of stories I like, that if they make what they're trying to do, if they make it work, this could be, I don't know exactly, but let's say a 10 to 50 bagger over the next 3 to 5 years. Do I know that's going to happen? No. I know that the downside is 100%, and the upside from 30 million in case of success is very, very material from what I can see. So they recently closed a 1 million private placement. I'm not even sure they really, how much money they needed, because after that was done, you could see it's like, I missed 3 news releases just from when I was at Deutsche Goldmesse. So they appointed a new chief operating officer, Armando Farhate, a Brazilian citizen, has more than 36 years of industry experience, with the last 13 years being in the mining sector. He has occupied C-level and upper management positions in mining companies in Brazil, Canada, Namibia, and Botswana. He's currently director of the board of 3 Canadian mining exploration companies. He brings extensive experience in all areas of this industry segment, with special focus on operations, sales, marketing, engineering, and mineral resource development. As I assume the role of Chief Operating Officer at Homerun Resources, I am energized by the prospect of leveraging over 30 years' experience in this dynamic industry. The company's uniqueness and vast array of opportunities inspire great confidence that revenue milestones will be surpassed swiftly. With the collaboration of a truly exceptional team, I'm eager to propel our operations to new heights. So I don't know who this person is. It's like I don't... he's, I guess, based in Brazil. That's my guess. But there's a lot of industry people I don't really know. Still, he seems to have a lot of experience, and I especially like this great confidence that revenue milestones will be surpassed swiftly. Okay. Homerun Resources announces CEO update to shareholders. I'm not going to read this entire thing. You should all read it yourself. I think they did a recent interview as well. And this is some parts of this is quite technical. Because they have silica sand, and one of their competitive advantages is apparently that they have very, very high grade silica sand. So we're gonna look at it soon. So there's like a pyramid where it's like the higher you go into the decimals of pureness. Like if you go from, 95%, that can be used for whatever, and then it just kind of exponentially increases in potential revenue, the higher you take it up to, like, I think the highest is like 99.999% silica or something. Then you could get thousands of dollars per ton for that. So they have their starting purity is exceptional. That's my impression. So where other companies that have lower grade or lower pureness silica sand, they would need to spend money to upgrade it just to get to where Homerun Resources are starting. That's obviously a huge competitive advantage. That's like their base case sand is already higher quality than most under silica sand producers, how they start off. So they need to spend money and go through processing to get it up to where these guys are starting. And like they say here, Homerun is now focused on increasing the in-situ value of assets we own in the world-class silica and sand district. Belmonte is a world-class based on the size of the district and the uniform and well-known high-quality natural grade. Securing our interest in this rare commodity is cornerstone of our value, and that should provide our shareholders with significant comfort. We are not hunting for value. We are scaling and leveraging the value we have already secured. From a resource development perspective, we have compressed a 5 to 10 year process into 12 months. During the next few months, we will be quantifying the value of the silica sand we have directly secured, and we'll release more updates on those efforts shortly. That's the beauty of this, I think, that a mine. Let's say you have a mine that's like on paper it's worth $500 to $1 billion when up and running. Okay? That might be true or not true. You'll get the answer to that. Let's say you buy a junior for 30 million. A typical mining company, like a gold mining company. And if it's worth, let's say, $50 to $1 billion, you're gonna kinda find that out, let's say, when you actually build it. Let's say that takes 5 to 10 years to build. This is at surface silica sand, which is basically a shovel operation. It's like, a quarry. No undergrounds like build a $400 million plant, crushing and whatever. It's like, no, the deposit is right at surface. It's sand, so you don't have to blast it. You just scoop it up and do a lot cheaper processing than it would be to get gold out, that I'm pretty sure of. And in this case, you're simply just upgrading it. So here, from a mine development perspective, we are on path to compress a traditional 2 to 3 year mine development to cash flow process in 12 months. That's again the beauty of this. I talk about exploration stories where it's like, let's say a really nuggety gold system. Let's say newfound gold. Let's say the blue sky is, I'm not going to say blue sky, but let's say they have 5 million ounce potential. That might be true, and the same was for Great Bear. That still took for Great Bear like 3 years of drilling to prove up that, and they never actually put out a resource. But it's like nuggety gold system, you have to drill, it's drill intensive. Especially newfound gold is drill intensive. I mean, they're drilling like 500,000-600,000 meters. It takes a long time to prove that what you hope could be there is there. Whereas you have like snowline gold and the valley target. The idea there were like, hey, within 30 holes, we're gonna have a good sense if this is a significant discovery. And we had that after 30 holes. A typical lode gold system, after 30 holes, the only thing you know if you hit gold is that you have some gold. You for sure are not proving up even 1 million ounces. Or even 100,000 ounces, probably. So this is a very contracted, let's say, alpha phase. Whereas like instead of a traditional mine development that might take, I think this company is worth whatever in production. There's a 2-3 year build time. For them to get to cash flow, they're aiming for, to do it within 12 months. So if this is a success from a mining perspective, actual revenue perspective and all that, we might get the answer to that like a lot faster than you would get for a typical mining company. That's a rapid, again, in case of success, that's a very accelerated time to profit. From a compounding perspective, that's obviously huge. I mean, imagine if you have something that, in case of success, could go up, let's say 5 times. I'm just making up a number. Compare the compounding effects of having that take 2 to 3 years instead of 12 months, let's say. Even if you could string successes in a row, a 5-bagger in 2 to 3 years, you get that into another 5-bagger in 2 to 3 years. That's a humongous compounding in the long run. I mean, even if you did 100% in 2 to 3 years, that's actually really good returns. If you could do that in half or a third of that time, if you would do that, well, it wouldn't take that long actually. It would just, absolutely obliterate this compounding, which is already good. I mean, again, let's say it takes 3 years to get 100%, and you have one that could revalue in 12 months, 1 year. So after the first year, 1 goes to 2. That 2, you find another one, that 2 goes to 4, and then it goes to 8. 8x in 3 years, whereas this would have gone 1x or 2x in 3 years. And that would just keep on, the compounding would just get more and more egregious in favor of the quicker compounder. That's what I really like. Again, I don't know this is absolutely going to work out, but they have big plans. They are announcing also memorandum and understanding with Halocell Energy Inc. And they've done other deals and partnerships. Homerun is developing its business with the energy materials verticals focused on the solar and energy storage sectors. So they hope, the idea is that their base case, if they just sell their sand at the purity they get it naturally, they think they could do good money on it. If they could upgrade that, they're already high purity silica sand. If they could upgrade that and maybe, increase the revenue, let's say it cost, let's say it cost, I'm just making up numbers here, it's like $20 per ton to upgrade the quality. And that new ton with higher quality would get them $300 more in revenue, for example. I mean, the margin of that vertical is obviously enormous. That would be some serious payoff. So Halocell and Homerun intend to collaborate to develop and produce the highest efficient and most stable outdoor solar glass PSC solutions. And if you listen to Chen Lin, he thinks, that the Silver Institute is underestimating how much solar will be basically installed worldwide. And he also believes that the AI boom will need solar because that's the quickest form of energy production to set up. A nuclear power plant might take 10 years or whatever. Solar you could do maybe within a year or something. I'm not saying that's going to happen, but it's like, as it looks now, solar is actually one of the most impressive growth areas worldwide. So here you have their presentation. And again, I'm not going to pretend that I understand everything and all the potential of the vertical stuff. But this is I remember reading this article way back when because it sounded so weird. Our entire society is built on sand. Sand is the primary substance used in the construction of roads, bridges, high-speed trains, and even land regeneration products. Sand, gravel, and rock crushed together or melted down to make the glass used in every window, computer screen, and smartphone. Even the production of silicon chips uses sand. Yet the world is facing a shortage. Business plan, phase 3, vertical integration. I'm already down there. Okay. Our vision is to be a leading materials company in the high purity HPQ silica energy industrial verticals. Business plan roadmap 2024. The silica sand can be sold in its natural form to select few organizations that have their own upgrade processing operation, but this is a very low margin opportunity. The supply into higher value end users require at least a minimal amount of processing, wash size, dry bag. So again, it's like if they just sell the raw stuff, they just take it out of the ground, as you can see here. I mean, that's the point. Like here you have some, whatever that's called, like just scooping it up. So this is extremely high, pure, natural silica sand. If they just scoop that, put it on a truck, sell it, they'll probably make money on it, but it will be pretty low margin. If they can do the at least minimal amount of processing, wash, size, dry, and bag, and I don't think that's high capex. Okay, already then they might, again, I don't know what the margin would expand to, but let's say that's a good margin. And then phase 3, Homerun is driving toward revenue, and at the same time under phase 3 executing on engineering and R&D plans to secure competitive advantages in HPQ silica vertical, serving the energy transition. Announcement in this area have already been made and will be forthcoming over the entirety of 2024 with deliverables expected in 2025 and beyond. So this, what I think one of my strengths is not understanding every single detail of anything. It's like I don't understand every single detail of an ore body or a mine plan or anything like that. It's like what is important and what's not, and at the end of the day, the risk reward. Can I see, is like, does this make sense? Yes, I think it makes sense, and they've announced a bunch of deals or MOUs, and I mean according to them we're probably going to see a lot more stuff, and we know this is like let's say exceptionally high grade already, so that's already a competitive advantage. It's like, yes, our gold mine is at 15 grams per ton instead of 6 grams per ton, for example. Then you have, obviously, yes, it's a global market in that sense, but you already have a competitive advantage because you have a better ore body. More things can go wrong, you have higher margins, all of that. It's really a better business because it's let's say a high margin producer, not a low margin producer. And here you can see the kind of different stages. So they start out, if I understand it, this is like in the ground. This stuff here is already at 99.75% pure silica. So it's already above the clear glass grade, where you get 50 to 150 USD per ton. I don't know what it would cost to just ship that stuff. I mean, ship their natural ore. I would guess they make money on that. Okay, if they upgrade it by 0.05, they get into the optical glass. That's already up to 100% high revenues. Well, actually more than that. I mean, this is 6 times more than this base case, but not a lot more than the lower case here versus the upper case here. If they can get it up to 0.95, then they go from 160 to 300 to 300 to 500. And then it just ramps up. Here we're already getting into $500 to $1,000 per ton. Then it just, the prices get obscene, but these are smaller markets. So would you could maybe, who knows, swamp it if you, produce hyper HPQ, whatever. But, the thing is, I assume they can do let's put it like this. They could probably produce any different quality in a sense. Maybe it makes sense to just focus on, we're getting up to this 99.95. So they upgraded it by 0.20%. And they can, do pretty good volumes and get 300 to 500 USD per ton. That would probably be a very, very profitable business. I'm not gonna speculate how much you could make, but let's say, I mean, what would it cost? Let's say processing is, and I might be way too conservative here, but let's say it's $100. In that case, okay, cost $100 to get it to this stage, and you sell it for $300 to $500 per ton. So you get an idea. It's like, this is not a complex polymetallic lead, silver, zinc mine with refractory or whatever. This is a shovel-ready quarry, basically, with a competitive advantage of already being at 99.75% silica, already above the cutoff grade here, not far off from getting into this. And then I don't know the exact cost of the upgrading stages, and the value kind of, you know, goes exponential. So this appears to be a... Oh, okay. The standard physical processing achieves 99.985. Okay, so just from standard processing, I guess that's like, what was it, like sorting, drying, whatever it said. I think, you know, on another slide. So that would already, just from the standard physical processing, I'm assuming that's low risk kind of stuff, they would get up to this here. Slightly below, just 0.005 below this, but above this threshold, where they would get $300 to $500 per ton of free digging sand. Does that sound like a pretty good business plan? Yeah, I think so. And again, in my opinion, it seems to be that by far the competitive advantage is that this simply happens to be a very pure deposit. Mother Nature, for some reason, made this a very pure silica sand deposit. Phase 2 infrastructure revenue, production of processed silica in 2024. That's this year. Immediate plans is to move extracted silica sand from Santa Maria Eterna, the mine, to Tidewater through Belmonte. From Belmonte, the silica sand will be transported by large ocean barge to storage at the port of Ilhaus, or however you pronounce that. Advanced processing will take place at the port of Aratu in Salvador. Significant cost reductions with infrastructure in place. That's also the beauty of it. It's like they don't need to build a bunch of stuff here. They can, I believe, just get trucks here, put it on a truck, and then do whatever. Have a, you know, relatively simple processing at the port or wherever. They don't need to take 3 years building a $300-400 million dollar plant and, you know, mill and stuff that you would do for a typical hard rock mine. Belmonte District mine infrastructure, road infrastructure, power infrastructure, nat gas infrastructure, barge loading facilities, single barge capacity of 10,000 tons, multi-barge use capabilities. You can, I haven't done it that much, but like one could probably play around quite quickly with some numbers. There's like, okay, what kind of potential revenue could there possibly be from like doing the standard physical processing and getting $300 to $500 per ton? And here you have like shipping facility, storage facility, whatever. I mean, Brazil is quite, you know, industrialized because they export a shit ton of commodities. Production of processed silica in 2024. Physical upgrade at Ilhaus, stage 3, thermal upgrade at Aratu, HPQ silica markets, yada yada yada. And then the vertical integration, where, I mean, then I think it's like if, and of course, I mean, stuff like this, like I think they have a, I'm not going to say deal, but they have, well, maybe one could say it's a deal. I don't remember the news release, but they are working with the US Department of Energy and National Renewable Energy Laboratory. I think that's a pretty good signal value that this is for real. I mean, and again, it's my understanding that there is kind of a silica sand shortage in a sense. And if I'm not mistaken, I think quite a bit of it comes actually from China. So this might be somewhat strategic to secure. And especially if you have higher quality already than the Chinese, that's like, yes, the Chinese might be really good at selling a bunch of lower grade stuff. That's they're typically good at that because they don't have the, environmental things to care about much. So maybe they can, whatever, undercut almost everyone when it comes to lower stuff. But if they don't have this kind of, these kind of natural grades, and it doesn't cost that much to upgrade it to an even higher purity, then I think, we're talking. So, to end with, as always, I don't know what stage, if they're going to make it all the way to phase 3 and that's going to be a huge success. If they do it, I'm not even going to speculate on what the value of this company could be. But in my mind, just crudely running through some numbers, and I think they have, 100 million tons, 80 million tons supply agreement, current negotiation 40 million tons. They could be shipping a heck of a lot of sand for a long time. And if this is quite, I'm not going to say unique, but relatively unique, how pure it is, and they get some vertical integration, so they get an even more competitive advantage kind of thing, I think this could be a really big business one day. And today they have a market cap of 30 million CAD, which is basically, you don't have much. If this was a gold junior, maybe they have a discovery hole or something, and there's like a 5% chance they're going to have a mine, and if they have a mine, it's going to be built in 5 to 10 years. Probably not within 5 years. This is a case that can play out. I think the proof of concept can kind of be proven in within 12 months. And then it's perhaps a matter of like, how far do they go? Do they are they able to get some deals and are able to upgrade it to really, really, really high margin stuff? Do deals with whoever, entity, become kind of a strategic supplier, let's say. You can read the forum. I think it's a really good forum. There's a bunch of people sharing a bunch of information here. What's happening in the area, that the BYD, the big Chinese car maker, I guess, is setting up shop and all of that. So it's a very fascinating case. It's a lot to, let's say, swallow, but I think this is, think about it from a signal value. Okay, they raise 1 million. That's not a lot. And then they, do another memorandum of understanding with Halocell Energy. I don't think they would have that big of a problem of actually securing some fund. Most crappy gold juniors can raise more than that. But I actually don't think they believe that they need it. And that they would be diluting the upside. Because pretty much all the infrastructure is there, and they can start off relatively small, again, maybe selling the raw silica sand and make some kind of margin and fund themselves and all that. And I think I was going to say, I'm pretty sure, or maybe it's not here, but I'm pretty sure they granted options quite recently which were higher than what the share price was trading at. Maybe it was at 50 cents, and they did maybe 75 cents options. I mean, if you look at the typical shitco gold junior, they're putting out options at the current price, especially at lows, because then it's like, oh, you know, pretty low threshold, for example. So I take that as a, you know, signal value, confidence value. That's just, I mean, from what I've read, it's like people have wanted to get into the financing, but they didn't allow more people in than 1 million. Again, it's like, okay, here we want you to, you know, take my money. I can't guarantee that, but it's like, that's what I've been reading. It's like, let's say at least a few people like, hey, I like this story, I would like to get in, and they're like, nope, we don't need the money. That's not a typical junior thing to do. So again, is that going to be good or bad? I mean, time will tell. But from a signal value perspective, I think it lines up with, they actually think that we think we have such a good thing going here that we don't, and a low capex opportunity, that we actually don't want to dilute. We want to keep dilution at a minimum. And it's like, this is a pretty tightly held stock. It's like, I mean, 24,000 shares, 47.18. And during the, you know, from the top here, I was going to say, it's like the volumes have been going down. So there's not a lot of selling in this correction. And then again, I don't trade based on this, but it's a bit interesting. Just looked at the MACD, it's like monthly. Yeah, I mean, what they're saying is that a lot of things are going to happen over the next 12 months. What they're saying is that within, you know, 12 months we could be in, you know, a cash flow position, and, you know, instead of having years of a development time frame, which is typical for, you know, a typical mining operation, again, they might have it condensed to, what was the from a resource development perspective, we have compressed 5 to 10 years process into 12 months, and again, from a mine development perspective, we are on a path to compress a traditional 2 to 3 year mine development to cash flow process into 12 months. A lot could change over the next 12 months. And if this really works out, I don't know what the blue sky is, but I think it's a hell of a lot higher than 30 million, because that's not in a serious business. But this looks like they could have a really serious business, maybe even potentially a strategic thing, actually. And yeah. That's it. It's like, I think, as always, I think a no-brainer should be easy to see. You shouldn't need precision. If this was valued at 200 million, then it's like, oh, you know, blue sky needs to be pretty high. Chance of success needs to be quite high. And even, you know, the payoff wouldn't be that impressive in any case. Let's say there's a $1 billion blue sky and you're at 200 million. Of course, that's, you know, pretty high gap between 200 and $1 billion. Still, I mean, I kind of can find that in I think, you know, some good old gold units, for example. In this case, I think they actually have a chance of like a relatively low risk, high margin, low capex, quick growth, quick growth pathway to a serious business, like a cash flowing business, and they have enough sand that is like, we're not talking probably 10 years, but maybe decades worth of a business. And I would assume that, you know, that might get better and better as they, you know, develop the partnerships and do the research and all that. So this is simply a very interesting, and I think it's very relevant given that high purity silica sand is probably, you know, needed more of, as the article from 2021, and they have the competitive advantage of already having in its natural form 75% purity. I took a pretty decent position in this, larger than most other mining company placements I did, and I was happy to, you know, bring them on as a banner sponsor as well. So yeah, I mean, at the end of the day, this is a I don't even know if I should say it's a high risk case, but for, I don't know, to be conservative, let's say it's a high risk, high reward case. Personally, I think this might be actually a medium to maybe low risk, high reward case, and that's obviously why I put in a pretty decent position in it, and I bought it actually for, I think, every single family hodl portfolio as well, which are supposed to be like, okay, you buy it when you think it's a kind of a no-brainer. Hopefully, if it works, you don't have to do much, but if it works, in 1 year you're going to be up, in 2 years you're going to be up more, 3 years you're going to be up even more. Don't really need to trade it. Either this works or it doesn't. That's the thing. And given the vertical integrations and a lot of stuff, so actually their quote ore body could actually become better, because they got, it's like they're let's think of like a mining scenario that you're starting with 4 grams per ton and your cutoff grade is 3 grams per ton, and in 1 year the grade goes up to 5 grams per ton, and in year 2 it goes up to 7. So you're actually making, the mine gets better and better. That's a scenario I think is possible here if they get their the vertical integration going and can go up into the higher food chain. And again, it seems that they could already, from just standard physical processing, they could already get up to $300 to $500 per ton in revenue. That's actually really good, especially if, I haven't done numbers on it, but if I would compare that to, I like some gold miners that have like maybe $130 per ton in whatever processing cost, mining cost, and they have an NSR of $250 per ton, and this is like literally a quarry operation without huge capex. No, from what I can see, no complex engineering, no needing to take on $200 million of debt or anything like that they could be with very low capex in startup production, within 12 months, get to cash flow within 12 months, and then ramp from there. Yeah, so again, I'm biased. I'm not all in on this story, but it's one of those stories where it's like I have a position big enough that if this pays off, if they do it over the next 2 to 3 years, maybe it would have paid for 10-15 other juniors that actually didn't work out. And yeah, this is just from interesting or TA perspective, even though it's like I'm just noticing the crossover here. I thought I would at least touch. There were 2 companies at the Deutsche Goldmesse that I actually hadn't really known about. Well, this one I actually did not know about before. Their flagship project is they're going to be drilling deep holes at a porphyry target in Arizona. This is one of those high risk, high reward bets. They're going to be deep holes, they're going to be expensive holes, so it's like I would say very binary outcome. If it's there, it could be something big and valuable, and let's say they raise more money, and let's say the market cap is, I don't know, diluted like $10-12 million, whatever. Okay, then I just compare that to what if they actually find something, because this is in Arizona where you have giant porphyry bodies. Let's say the price is $1 to $2 billion. $1 to $2 billion price. I'm paying 12 million. I need to be right 1 in every 30, whatever, for it to be a mathematically good bet. So even if the chance of success might be 10%, that might still be at a, let's say, 12 million market cap diluted. That might be a really good bet because it's pricing in a 10% chance of finding something that would be worth 120 million, not 1.2 billion, for example. So this is interesting to me, but obviously this is also one of those where it's like you don't want to be too greedy. It's like, oh, I'm going to bet everything that they hit. I mean, let's say there's a 20% chance of success. So it's like 20% chance that you're going to erase your entire portfolio. But on the hopes, like no, 80% chance that you're going to erase your entire portfolio. But like 1 in 5, 20% chance that you're going to do a 10-bagger. And the thing is, of course, like even if they hit, it's not like the stock is immediately going to go up 10x. So that's also one thing to keep in mind, that discovery stories typically don't revalue to the blue sky in like a day. That, oh, if this opens up and it's up 100%, that might be actually a even better time to buy than at this price, for example. But if you're okay with the pre-discovery risk and getting in a bit, or 50% cheaper than a post-discovery, if you can take that risk, then I think some of these bets like this are really good, because it's like a relatively quick outcome. Let's say they drill a few holes, we'll know immediately if they have something or not. If not, okay, minus 50%, 60%, whatever, write that off. They have other projects too, so everything is not, but still, let's say, okay, the case is killed. In case of success, maybe again, then given that it's a pretty concentrated area, since porphyries are, I mean, yeah, they're deep to prove up in a sense, but it's like a porphyry you typically don't need to drill, for along 4 kilometers like a nuggety gold system, and it's like you need to put in holes everywhere. And especially given that this is deep, I mean, if they get proof of concept, if they make a discovery hole or two, maybe we're off to the races. The other one is Vior Inc. I looked into this some time ago. The interesting thing here, I think, what really is like made my antenna rise, is that this is I don't think the share count is updated though, but I think they had a market cap of like maybe 16 million, and they raised over $20 million. That's a lot of money for something that the market said was worth 16 million. Osisko Mining is apparently kind of a lead order, and this is their flagship project is a brownfield Canadian gold play, high grade historic production of 10 grams per ton. Okay, Osisko Mining, what are they famous for? They found the Canadian Malartic deposit, which is, I think, the largest or second largest gold mine in Canada. Maybe Detour is larger, I'm not 100% sure. Worth billions of dollars. Okay, brownfield again, historic production. They appreciated, hey, there's more to it. Then they went on to the Windfall deposit. I've actually visited the Windfall deposit. What did they do there? I'm pretty sure that was also a known historic, past producer or historic process. And now they have like 6 to 8 million ounces there. So the Osisko Mining guys seem to be very good at appreciating that sometimes what's been mined historically at some places in Canada was just the tip of the iceberg. And these guys are set to do, and that's, I guess, typical Osisko fashion, let's say, very aggressive with drilling. I think they plan to do a 60,000 meter drill program with like 2 rigs. If that's successful, I think you have a real story. $60,000 meters could do a lot for, I think that maybe the diluted market cap is like 35 million or something, but it's like the enterprise value I think is around 15 million or something. So yes, again, I like to find typically somewhat unique situations, like, because again, it's like every single 16 million market cap gold junior out there, it's not going to be able, nobody's gonna want to throw 20 million at them. So if somebody does that to a company, the market is probably missing something in the eyes of the funders. I'm not a shareholder of this one, at least not yet, but I thought I would at least like, hey, this might be something to look at. The other ones I am a shareholder in already. Oh, well, this turned into a much longer rant than I anticipated. As always, consider me biased. I have no idea if I'm going to make money on any of these stories. No guarantees of success. Never risk money you can not afford to lose. Diversify, etc. Etc. Not investing advice. I think I said I'm biased, but I'm biased, and some are banner sponsors, so that makes me twice biased. Have a good day. I'm actually leaving I'm leaving on a trip tomorrow, so I won't be doing any more videos in a few days, so I thought I would put this out. Thanks for listening. Bye.